there, community bankers. Welcome to the first ever episode of a brand new podcast, Correspondent, from your trusted correspondent partner, Independent Correspondent Bankers Bank, or ICBB. I'm one of your hosts, Madison Kaplinger, the Marketing Associate for the Bankers Bank. And I'm joined today by our President and CEO, Derek Hetherington. And later we'll be joined by our two previous CEOs, Bill Fallon and John Clark. So as some of you may know, 2023 marks 35 years in business for ICBB, which is an accomplishment for any business really, but especially for a banker's bank, as we've seen many come and go. So we wanted to spend this first episode reflecting on that legacy and discussing the future of our institution. So I have Derek here with me, and we're just going to spend a few minutes talking about the present and future of the Bankers Bank. Derek, how are you doing today?
Madison, I'm doing great. Look forward to getting this thing kicked off. I know you and I have been talking about a way to continue to explore avenues to contact with our, respondents and to the community banking partners that we have, and we've done several, video interviews over the last year, kind of highlighting some of our clients, our customers, our staff. So this has kind of grown out of something that was a vision that you started, and just kind of building on our brand and recognition of who we are, and coming into our 35th year, kind of revitalizing our former print, uh, you know, share our newsletter that we used to do that was called the Correspondent. Kind of make it a virtual kind of online format, I think is very exciting. So it's just kind of marks the, I guess, the transition that we've made from our roots 35 years ago. So kind of taking some time today to kind of reflect on that, and then giving an opportunity here later on to talk with Mr. Fallon and Mr. Clark about the early days of Bankers Banks, and kind of reflecting a little bit on what their challenges were and kind of how those match up with us today. I think it's going to be a really good way to kind of kick this off. So I appreciate you kind of coordinating it and giving me the opportunity to be your co-host on the first inaugural episode of this.
Yeah, of course. I mean, I think it's only fitting for this episode. So you started as president and CEO. You predate me, obviously, but 8 years, is that correct?
So I actually joined the Bankers Bank about 8.5 years ago. It was in August 2014. I originally joined the bank, just came in as like a senior vice president and a lender, kind of heading up our correspondent division. Really working with our our sales and marketing team at that time to kind of basically establish the strategic plan for us going forward. And it was kind of predetermined at that point in time that there was some succession requirements within the banking, itself, with Mr. Fallon and John Clark both approaching 30 years of service with the bank, and kind of wanting to be able to, retire. They kind of flagged me as their heir apparent to take over president CEO. When Mr. Fallon retired in 2018, John Clark, who had previously been the executive vice president, senior loan officer of the bank for the previous 29 years of his career with the bank here, uh, stepped into the role of president CEO. And I came in as EVP and senior loan officer at that point, and served that role for 2 years until John's retirement at the end of 2019, at which point in time I took over as president and CEO January 1st of 2020.
Okay, so you came in, and then 2 to 3 months later, you get hit with a pandemic. I bet that was fun.
It was a challenge that was not expected. I think that one of the things that we had kind of developed as far as a vision for the Bankers Bank was kind of restructuring the organization. We had a very vertical organizational chart before. John and Bill worked very well together, having one. John was more on the loan marketing sales side, and Mr. Fallon was more on the office, management, operations, finance side of it. So they collaborated very well together. Very different backgrounds and experiences, but great knowledge of banking overall. So they were able to kind of, just the two of them, really have a good dynamic to be able to kind of oversee everything that was going on in the bank. When I came in, obviously my background was commercial banking. I'd done retail banking. I've worked basically started off as a teller, worked my way all the way up into commercial lending, several management roles along the way. So I had a good diverse background and experience from the bank side, but from a correspondent side, I was a little green. So I had to learn the way we do operations, the way that we actually service our clients and customers. So I really kind of looked at the staff that we had that had been here for a long period of time and looked at a way of kind of elevating them into a higher level of responsibility. So not only was I new to my role as CEO and president, but a lot of the senior management team they kind of brought with me or elevated from their previous roles, they were kind of new to that role as well. So we were all trying to kind of establish the foundation for what we wanted the Bankers Bank to be going forward, all kind of taking on some new responsibilities within the organization, a higher level of responsibility, I should say. And then we get hit with the pandemic. So
Yeah.
it was kind of baptism by fire. So even though it was one of those things where it was unexpected and it was a challenge that I don't think anybody could have ever planned for, I actually think it really served us well because it kind of forced us into a position where part of the senior management team that had never really had to be put in a position of making decisions. Because John and Bill had such great oversight of everything that was going on prior to that, that kind of all decisions went through them to this, situation where we had to react quickly and we had to make decisions quickly, and we couldn't rely on individuals like myself to make those decisions. It really kind of reinforced that new structure that we had within the organization, and ultimately kind of proved our success. And I think helped boost that senior management team to believe in what their new role was within the organization and their ability to kind of fill that gap with the departure of both John and Bill.
Right. That makes sense. So restructuring the organization, I guess that was that priority number one for you coming in, or were there some others as well?
Well, during the first, 6 years that I was here, my primary role kind of put me out in front of our banks. Spent a lot of time, talking with community bankers about, the challenges they were facing, and kind of looking at what we did as what the primary purpose for the bankers banks when they were first developed back in the 80s, and how that kind of new structure of bank and organization came about. What was that purpose? What was the reason for that? And does that purpose and reason still exist today? Or has the community banking environment changed so much that we need to adapt with it? And the one thing I did identify is even though what we specifically do for our banks may evolve, and the scale in which our banks are operating and actually on the loan side, when you're looking at the just the size of credits that they're seeing from their borrowers, to the automation of technology being integrated into the payment systems and the automation of a lot of the operation things that used to be very manually intensive. We've kind of had to change what our long-term vision is in order for us to continue to be successful for the next 35 years. So that was kind of priority one. But along that way, I've been kind of working with the individuals I identified to be part of that senior management team and talking to them and learning about how we do our operations today. How does our participation loan network and the management of those loan operations work? How does all those nuances of what a banker's bank does, which is a little different and a little more specific than what most banks kind of tend to deal with on a daily basis. We had kind of already, as a team, developed a vision for the bank. So even though it was kind of a transition for us all at once, I think it was more of putting it into practice. We already kind of knew what that organization reorganization of the company was going to look like at that point. Obviously, through the board, having to accept the fact that the previous leadership of the organization was leaving after 30 plus years of being here and managing the company. Uh, there was a several year period there where we were talking about my vision for the bank, talking about the restructuring of the organization, introducing them to these other senior management members that a lot of them didn't know specifically or have directly worked with in the past, to get their confidence in that, hey, this structure is going to work. These are the right individuals. We've got a good vision and plan for this. Um, so there was a lot of work over that first 6 years that in 2020, the groundwork was already laid. We already kind of knew the direction of the bank that we were going into, and everybody was kind of prepared for it. I think when the pandemic hit, it basically just accelerated that process of, hey, it's we got to do this now. We can't, work through this over the next 6 months to kind of figure out our roles and everybody get comfortable with it. It was like, like you said, within 90 days of the reorganization, we were in, full effect of everybody needs to take the reins for their area, really operate the bank, and be proactive in making sure that we're doing the right decisions to make sure that we keep business continuity in place and that we don't have anything that negatively impacts our clients.
Yeah, absolutely. And I think it's, good that you had laid a vision in such a way that you didn't have to do a hard pivot, but just lean into what you already had. Because, for example, I was working in higher ed at the time, and when the pandemic hit and everybody went home and nobody could be on campus anymore, that had to be like a hard pivot. Like, okay, all of our marketing that's focused on this on campus experience for the time being, kill that. We got to do everything differently. So it's good that you were facing more of a leaning in than a hard pivot.
Yeah, and I think that that's what led to our success. I think that's what led to 2020. As much as the challenge that we faced in that year, we had a lot of success, and we actually got a better understanding of where we were positioned as a banker's bank, and was able to make some, I wouldn't say corrective actions, but we were able to kind of do some things that I think it has strengthened the foundation for us as we move forward. That could have possibly led to some, I wouldn't say issues, but would have probably required us to kind of back off of growth or expansion of what we had kind of visioned, um, based off the way we had kind of operated and we were structured. It kind of was a little bit different than a lot of the other bankers banks that are still in operations today.
For sure. For sure. So I'll end this um, section with one last question. Heading into year 35, where do you see ICBB heading for the foreseeable future?
Well, I think the challenge that we face, and that's kind of the unique thing about a banker's bank. For being new to the bank, we've kind of talked, and we do have some community banks out there that still have don't have a familiarity with how all bankers banks operate. It's like we all have the same charter, we all have the same mission, our purpose is all pretty much the same. But just like any community bank, we have our own culture, we have our own kind of organization and structure and how we do things, what we focus on and what we are considered to be the most important aspect of how we service the community banking industry. There's some nuances and differentiations between us there. But for the most part, I think that we have kind of stayed true to what the initial vision of what we were in 1988. There's a lot of other services and areas that correspondents have gotten into. There's some correspondents that started getting out and taking on more risk than probably what was necessary in order to have success. And some changed their focus away from just being there as a way to protect, promote, and support those community banks that we're servicing throughout our footprint. Um, I feel like we're in a great position ourselves. Now, as the industry, we are an aggregate of what goes on within the industry. If there's a lot of liquidity in the industry, we tend to see that through the increases in Fed funds that we manage. If there's less liquidity in the market, then we tend to see that as a result of banks borrowing and overnight Fed funds to help manage their balance sheet liquidity. So we tend to have a sense of what's going on in the industry pretty quickly as our customers aggregate those needs. But on the, you know, in the same token, although we have a good sense of what's going on and we tend to benefit from being an aggregation of the industry, we also see the challenges of acquisitions and mergers. I think that the scale of requirements for businesses to operate has gone up. So the ability for banks to be able to handle larger clients. Even small businesses now are borrowing in millions of dollars versus hundreds of thousands of dollars like they did 35 years ago. So I kind of see our position within the industry as being one that's scalable. I think that community banks are still extremely important, especially for small communities. I think that any small community that you've seen that has lost their hometown bank to an acquisition or merger, um, regardless of who the acquirer is, that tends to have a negative or adverse effect on the economic development within that area. Um, Coming from a small town, I feel, like this is something that's not only a calling when it comes to my career, but also something, I grew up in a small town, 3,600 people, and I saw what happened to our storefronts in our downtown area. And about 10 years ago, the hometown bank that had always been there was acquired by a bank about 30 miles away, another community bank. But just the overall investment in that community, you have more, shuttered storefronts in downtown area, less jobs coming to the market, and it has had a negative impact on that small community because they don't have that community bank there anymore to support that local economic development. So a long way to the answer. I think when you look at bankers banks, our hope is that we can identify the small community banks have held true to what their, I guess, their purpose is, serving a small community, engaging community members to find new investors and shareholders for the future, trying to find employees and people to come in to help run and operate and eventually lead those organizations into the future. I think those are all important aspects that we can, through collaboration and partnerships with EKU and Graduate School of Banking at Wisconsin or LSU, identify ways to educate, train, and create talent for these community banks to be able to recruit. And then on the adverse, be able to help try to find ways for them to continue to adapt to changes in technology and enhancements to the payment services that they need in order to compete, and also make sure that they have the full scope of services that the younger millennial generation is looking for. And I think banks have done much better. I think the pandemic obviously accelerated the adoption of some of those services, which I think has been very beneficial. But it does come at a cost. So what we need to do is figure out ways to help mitigate that cost, help try to find ways for the banks to be able to operate more effectively, more efficiently. So as I look to the future, I feel like there's a great opportunity for us. It's just going to be maybe in a different vision than what the first 35 years were. Instead of being, helping to mitigate the the overhead of having to staff up an operations area in order just to process operations. Now it'll be more finding ways to aggregate and integrate technology so that it's scalable for all community banks.
Yeah, absolutely. I think that's going to be so important heading into 2023 and, the years after.
Well, I know that you're rather new to the Bankers Bank. One thing that I think that we look at when we brought you on to be part of our team with the vision that we have for marketing, kind of just resonates with what the overall vision is of the bank, is to kind of not break away from our traditions or break away from our purpose or mission, but to really kind of focus in on how can we do things, you know, more effectively in today's environment. Historically, our entire marketing was out in front of banks, at conventions and meetings, sponsoring association events, doing print media, mailers, and those things I think are all still important, especially the in-person meetings and the networking that we do, and the support of the associations to help support the industry. From a marketing perspective, things like this, finding new creative ways to introduce ourselves to our respondents and our prospects, to talk to them about who we are and what we're trying to do. Your vision, kind of doing this, of doing more marketing through a digital platform, using some of the tools and resources that we haven't really explored in the past because they were not traditional for what we do. Um, it's the same vision. It's not drastically different than what we've done in the past. It's just
Mhm.
using it in a different form, putting it out there in a different medium. So I guess this is a perfect example of how I envision our change over the next 35 years as a banker's bank is doing what we've done traditionally and just kind of tweaking it and making it relevant to today's environment and leveraging the resources that we have now that can be much more cost effective and much more scalable than maybe what we've done in the past.
Yeah, absolutely. And when you brought me in, I would say priority number one for me was not building a brand because you had already done that, but defining it so that we all know and are able to answer the question, who is the banker's bank? What are our priorities? What are our values? And then building awareness of that brand so that when we are going to these in-person meetings and conferences and mailers, they have some familiarity with who we are and what we can offer, which makes the leads for our sales team, that much warmer. And I think digital is a really good cost effective way to do that. And not only cost effective, but oh, what's the word I'm looking for? Uh, There's a huge reach opportunity there, is what I'm trying to say, because so many people, including our audience, are using these digital platforms and they're looking for information and resources, and being able to provide those, I think, aligns with our mission really well to protect, promote, and support the community banks.
And just to kind of, what you said there, when you look at what it is that the Bankers Bank is responsible for, like our mission, what is it that we do? We, started as the Bankers Bank of Kentucky. We were developed by Kentucky bankers. We'll get some, um, more information from John and Bill on how that all came about. But when you hear them, I'm sure that they're going to kind of talk about how that idea was formed by the bankers. Like it wasn't something that a group of investors came in and said, "Hey, how can we develop something to go out and service community banks?" It was community bankers looking for a partner that would, really not compete with them for clients and customers, and wouldn't, set up branches across the street from them or do anything that would be considered to be advantageous for them. So that's where the Bankers Bank kind of came out of, like that model, and where we started. And we expanded into West Virginia and Tennessee, and kind of started to expand our reach and our footprint once we kind of reached a level of customer base. We have about 80% of the banks in the state of Kentucky use us as our primary correspondent. I would say 90% of them are shareholders within our organization. So they have not only just a client, but they also are investors in us. Our board of directors consist of our client banks, presidents and CEOs from the 12 different regions that represent our footprint. And we have expanded into Illinois, Indiana, and Ohio as kind of a new footprint for us, just because the consolidations and mergers and the lack of de novo banks, in order for us to survive long term. We do need to look at the fact that we've had great success where we're at. How can we replicate that, take that to new markets with prospects that don't know who we are, that maybe have experiences with other bankers banks or other correspondents in the past that either were very positive or very negative, um, and how we can kind of differentiate ourselves from how they've used correspondence in the past or what those partnerships have looked like. So I think mediums like this and getting that out in front of them to kind of talk about who we are, and I think the testimonials of our customers go a long way too.
For
Those
sure.
clients that we've had for 30 years, that we were there to help them make the first loan when they became a de novo bank, and help them grow to organizations now that are hundreds of millions of dollars and having great success, and are true clients and shareholders of ours. Um, I think their stories will resonate with other community banks. So
Hmm.
I think that's one of the things that you brought that's a little different than what we've done in the past, that I really feel like helps to kind of define who we are more than us just talking about it.
Yeah. That was another big priority too, is to be able, when I came in, was to hear from our current customer banks
Mhm.
and be able to collect those stories because I mean people resonate with stories, I think, no matter what they are. But I've just been surprised at how overwhelmingly positive some of the stories I've collected have been from our long-term customers. From I actually got the chance to talk to a head of operations for a community bank in my hometown, which my hometown has two community banks and no too big to fails. So I, came in with some understanding of how important the community bank is, but I got the chance to talk to her and she was able to tell me about a time when, this big ice storm had come in, I think early 2021 maybe, but it had, cut power, cut phone lines, nobody could get to work, and they were still able to keep their most important operations going because they were able to get a hold of our customer service team. And she was able to name even the customer service reps she talked to. She talked about Carol Brewer helping her to, I forget which operation she named specifically, but just, you know, glowing report of how much easier we were able to make her life those days and the days of that bank.
Yeah, and those are the stories that really uh, drive me to go to work every day. It's like when you
Mhm.
sit there and you think about the challenges that we faced over the last couple of years. Those stories of success and our purpose, which is really to create business continuity for these banks. We want to be there to basically support them in their times of need. If normal operations, the bank's operating, they could probably forget that we even exist. And that's what we hope. We hope it's so fluid and so efficient that really we're just here as needed. And we find that those banks that have the stories of, you know, uh, in times of desperation, and or times of, unexpected, challenges. I mean, you take the tornadoes in Western Kentucky, you take the floods in Eastern Kentucky, you take the ice storm you're talking about, you talk about, all the times that we've had to assist banks when, they had an unexpected loss of an employee that was a key member of their staff, and trying to find, ways to help support their operations. Um, you know, we've had a number of banks over the years that have called us in those times of need, and even banks that don't actually aren't customers of ours. We were able to find ways to help support them in those times, and do what we could to kind of make sure that they were able to continue to operate and serve their communities. And that's our entire mission. That's what makes me proud of what we do, and that's what drives me to come to work every day.
Yep. Same for me. And I think that's a really good summation of who we are.
But I think that it's always good when you're talking about who we are, is how we got here.
Hmm.
So I'm excited to have the opportunity to kind of maybe introduce some people that aren't familiar with the Bankers Bank of Kentucky and the Independent Correspondent Bankers Bank as we're known by today. But I think if you reflect on why we were formed and how we were able to create the success in the first 35 years, I think that's even going to, tell the story of who we are and what our vision is for the future even more clearly.
For sure. And I think that's a really good place to wrap up this section. Thank you so much, Derek, for joining in this conversation and for the one to follow with uh, Bill and John. To all our community bankers listening, thank you for tuning in, and I hope you get some value from this conversation and the one to follow. Here's an interview with Bill Fallon and John Clark. So, Bill Fallon and John Clark, thank you for being on the correspondent. Um, so, to get started, tell us a little bit about each of your backgrounds before you joined what was then the Bankers Bank of Kentucky.
Well, in my case, Bill Fallon here. In my case, I worked for 17 years in community banking before I got the opportunity to help start the Missouri Bankers Bank in Jefferson City back in, and that would have been back in 84, late 84, when I helped start that Bankers Bank. And heard about the opportunity to perhaps come over to Kentucky and start yet another one. And some folks came over to the Bankers Bank in Jefferson City, and originally we're talking to the president of the bank over there, and he declined their offer to come over and start another Bankers Bank, but then they got permission from him to speak to me. And of course, I jumped at the chance, and that was back in '87, around Thanksgiving of '87. And that's what brought me 30 years worth of work here. So that's basically what my background was in banking.
This is John. Bill's being very modest there in his banking background. Um, I was born and raised in Lexington, went to University of Kentucky, and worked at a local bank in Lexington, First Security, for 9 years. And then I left banking and worked at an ad agency for almost 2 years. And I got a call from a friend whose father was one of the founders of the Bankers Bank, and said you might want to talk to them about going to work for them. So I went and talked to Bill, and we had a good conversation. And I remember driving home saying, "Well, that was good. Let the chips fall where they may, and maybe I'll get that, and maybe I won't." So Bill subsequently called me and invited me to join the Bankers Bank in July of '88, about 90 days after it started. So that's kind of how we got going.
Okay, that's interesting. So, Bill, you were the first CEO and you held that role for 30 years. Is that correct?
That is correct. That is correct.
Wow. Okay. So, John, I'm sorry, Bill, you were kind of talking about this before we started recording, but what led you to consider founding a banker's bank, which was something, unproven at the time, from what I understand?
You're correct on that. Really, I had two community banks that were sold out from underneath where I worked. So they were gone suddenly and bought out by the big banks. And I kind of got tired of that. And I wanted to go someplace to a quote, a banker's bank, which serves community banks. And that was my motivation to get involved in. It's basically takeover proof, virtually.
Now, I know when you first joined the Bankers Bank of Kentucky group, you were working for the Bankers Bank out of Jefferson City, Missouri. So at that point in time, to take that leap of faith to leave a position to come to a state that you were not from, what was it that was kind of the driving force that kind of led you to kind of take that leap of faith and move your life and your career to Kentucky, and take the chance to start this organization?
Well, I was given the opportunity to succeed or fail, quite frankly, and at least I was first opportunity as a bank president, and I'd already been executive vice president at the bank in Jefferson City, but I wanted the opportunity to succeed or fail on my own, and I obviously chose to try to succeed, which I believe I did. But the guy doesn't get fired for 30 years. That's a pretty good deal.
That's true.
John, yeah, John, I know you worked in correspondent banking prior to your small, I guess, tenure there in the marketing side. What was kind of your motivation to get back into correspondent banking?
Well, I missed banking and all the connections that I had made over the years in the correspondent banking area. So it gave me an opportunity to, help the new Bankers Bank hit the ground running, and all the bankers that I knew. I had 100 relationships in my prior correspondent banking role, which was basically about a third of the total relationships the bank had. So it was kind of a natural fit to come over to the Bankers Bank.
What I found unique when you guys first started recruiting me to come to the Bankers Bank 9 years ago, was how unique your two backgrounds were. I know, Bill, you came more from kind of the controller, financial operations compliance side. John more on the lending, correspondent sales and marketing side. So I guess, Bill, when you came in, how did you start to build your team? What was it that you were looking for when you went out to find people like John and some of the other team members that had joined the Bankers Bank in those early days?
Coming from the operations side, there was always a tendency in my case, especially in the loan area, I had a horrible habit of just saying no to everything. Because again, I'm very, very risk averse. So John was probably a very logical addition to it because he could say yes easier than I could. And frankly, some of those early loans he had to talk me into. Correct, John?
That's correct. Derek, one of the things about Bill and I is our skills really complemented each other. They meshed well, even though Bill had a background in every facet of banking. I was stronger on the lending side. That in my skills. So that worked out quite well, and he is very risk averse.
Understandable. So, Bill, you kind of hinted at the charter for the Bankers Bank began in 87 or 88, but you hinted at some meetings taking place as early as 1984. You kind of want to walk us through what played out there?
Yes, there were a group, and I'm giving the list to Derek, of 7 people who were meeting, like I said, mostly in secret. John, you probably remember some of that story, because a lot of them had holding company loans or bank stock loans. They were very concerned that during the process of trying to form a banker's bank, that one of their correspondent banks might find out and call their loans. So they were meeting in small motels, different places in the state, E-Town, around everywhere. Again, the 7 individuals that were their kind of the founding group, just kept checking and talking to other bankers banks around the country, Minnesota, Ohio, et cetera, et cetera. And again, that was about a 4-year process. They did try to apply for a charter, for a national bank charter, which they were denied back in, I believe it was 86. And then they decided to go the Federal Reserve route and try to get the charter through them and the state simultaneously. So anyway, those bankers, good people, country bankers, most of them, scattered from one end of the state to the other, from Hickman all the way over to West Liberty in the mountains. So that's how that began.
The charter finally granted in 1988 on April 15th or something.
It was February 1st of 88. And kind of a funny story on that one. The state would not grant the charter until we had FDIC insurance, and vice versa. FDIC would not insure us unless there was a charter in place. So I picked the phone up and called both of them and told them we had the charter and we had the insurance. And then they decided to go ahead and sign the charter. And so that's not the only.
February 1st, and then you open the doors when?
April 15th.
Yeah, that's what I thought. Okay.
I could have done it April 1st, but I thought that was a real poor date to open the bank.
Just kidding.
Now, as you kind of look at the list of directors that were originally involved in kind of the development and the, I guess, creation of the Bankers Bank, the initial investors that were involved in injecting capital into the bank. I know a lot of them, John Lawson, C.K. Stacy, they were still on the board when I got here after, the bank had been in existence for 28 years. And I know that over time, we've had a number of directors that have come and gone and served on the bank board, and some that were pretty instrumental in the early days are, either no longer with us or no longer in banking. So as you kind of think about, the early days, having that kind of group of community bankers from across the state helping to kind of navigate, I guess, what was your biggest challenge in trying to take this new model out to community banks who've had these correspondent relationships for years and get them to buy into this idea of a bank-owned banker's bank versus maybe a large correspondent with a relationship that they had developed over, a long period of time prior to you guys coming in?
There were several different approaches that I used. One, try to get cash out of business. So we were doing hard service charges, not soft dollar charges where you have to maintain huge balances to pay for your services. We tried the hard dollar route is something they could budget for, and that was my approach to it. In most cases, in my case, I don't know what John's experience was. A lot of times, the president of the bank I was talking to would call the head bookkeeper and turn me over to she normally to try to convince her that we were the best route to go. And I got thrown out of some of the best banks in this state. And of course, you don't never make the sale on the first call. It generally took me 3 or 4, sometimes 5 visits before I could get the business. I never cold called anybody. I always had an appointment because I was the victim when I was in community banking of my correspondent banker walking in saying, "You got a minute?" It always was when I was at my busiest point in the day. So I always had a subject to talk about when I made the appointment. So he or she, the bank president or one of the leaders, would know what I was going to be talking about the rest of before I even walked in the door. So that helped a lot.
Obviously, John, you kind of had a leg up having, 100 contacts across the state and being in the correspondent side for years. And obviously back in the late 80s, early 90s, the utilization of bank holding company debt to help, fund capital needs and growth and leverage acquisitions and stuff was much more prevalent. De novo banking was much more prevalent. So going out there, kind of revisiting, did you get any kind of, I guess, pushback with those relationships when you first went in, or were you able to kind of really leverage that history with those banks, kind of help maybe accelerate that sales process a little bit?
Good question. The accelerating the sales process was not possible. The gaining of a correspondent bank relationship is a long sales cycle. So you have to go in and first sell yourself, then sell the bank. And a lot of bankers were uncertain whether the banker's bank would make it or not. And it was a totally new concept. And we were not offering the perks and the frills that the other banks offered. We were kind of no nonsense, hard charge, give you great quality service type of organization. So I was able to obviously get in the door with a lot of my former customers, but like I said, it was a challenge and a long sales cycle, even though some of them were good friends. So it did take a while to build the customer base.
Well, I appreciate both of you guys for sharing that, because I mean, when you guys start off with no customers, trying to build a foundation against a legacy of, correspondent providers in the market, as you well know, we're looking at our own kind of footprint and kind of looking at the future with consolidations and mergers on trying to expand into relationships outside of what's been our foundation of Kentucky, and then an expansion into West Virginia and Tennessee in the previous years, and then now looking at Illinois, Indiana, Ohio. We have young sales executives that are coming in, looking at this sales cycle, and we keep trying to reassure them that it's about, like John said, building that relationship, developing an understanding of who we are as Bankers Bank and how we focus on, servicing the clients and providing them, the best possible service versus maybe, like John said, a perk and trip to the Masters or something like that, like some of the other, fly by night correspondents in the past have tried to do to gain business. So hearing that you guys faced the same dilemma in the late 80s, early 90s when you were building this from the ground up, it's kind of reassuring for me as we're looking at this from the early 2000s, as we're looking to try to expand this and go up against established bankers banks and established correspondents in other markets, to try to go in there and kind of introduce ourselves to those banks and to win those opportunities. So.
The average sales cycle in the early years was probably close to 18 months to finally get loans and everything else from them. It just wasn't that quick. You can't go in and get the business a week later. Lynn Ellis could do it sometimes. John and I couldn't do it.
Our strongest support came from the members of the Independent Bankers Association at the time. So they kind of signed on early in the deal, and of course they had friends, and we could use them as references. So that helped quite a bit. I remember our first loan, I think, came from Central Bank in Lexington because of Wayne Smith's support of the association. Second loan was out of the bank in Erlanger, Bill Shaben. So our first exam, we had 2 loans on the books, and I think it took them 10 minutes to clear them. Bill, wasn't that right? The first exam, I think they sent 9 examiners, and I told my wife when I got home, they surrounded the building. They could have done it with 2 people.
Easily. Instead showed up with an army.
But the loans came from people. We basically said, hey, we need some help here. So they were giving us what they could.
So it sounds like.
To finish the question, Madison, as to why I think the people wanted a banker's bank, this came out when I redid my research just to remind myself. They were concerned about, they had been selling their overline loans, excess of what legal lending limit is, to the correspondent banks. Some of those correspondent banks were getting to poach the loans. They'd all of a sudden say, well, why are you going through your local bank? You can come direct to us and we'll take care of all your business. That was one of their motivations. And one of them even said, well, I woke up one morning and said, I'm clearing my cash letter through this correspondent bank in Louisville. Are they going to be here a year from now? Now, what ultimately happened is they're all get out of the business over these last 35 years. Actually, it was while John and I were actually moved into this new building we're in, 10 years into our existence. And all of a sudden, who was it? PNC.
PNC disbanded the correspondent department, which was a great opportunity for us.
Picked up 17 banks in one fell swoop. I remember that number.
We had some credibility after 10 years that we weren't going to go away, because that was what the other correspondents were saying, that that bank won't be here, in 5 years. So don't use them.
And then you were.
Yes. And then the loan poaching kind of started the we're always a partner, not a competitor kind of sales pitch. And that plays through all the services of the Bankers Bank.
Right, absolutely.
We're not going to steal your customers, because that's, basically against our mission statement.
Right, absolutely. So you touched on, it sounds like it was really uphill during those early years, from having to have the secret meetings to some established bankers banks, the unproven model, and then having to work so hard to get the customers. What kind of drew you to do this in spite of, all of those uphill battles? Was it the demand specifically, or was there kind of more to it than that?
Well, for me, it was an opportunity to serve the community banks of the state, to help them survive the tidal wave of acquisitions that was happening at that time. The large banks were buying a lot of small banks. So the Bankers Bank gave them an opportunity to have someone they could rely on that wasn't going to try to buy them or put them out of business or put a branch, right next door.
Right.
That was for me.
There was one of the correspondent banks in Louisville that no longer exists. That frankly was putting up branches all over the state, and again, as John alluded to, in the very towns where they already had a bank they were serving. So it made very, very little sense to continue doing business with those folks. That didn't hurt when they started building branches everywhere.
Right. For sure. And just some background on me. I come from a really small town in northeastern Kentucky where all we have are two community banks. And it, I can't help but think that they do a lot more for communities than when the big banks move in and put, branches up right next to them. Is that something you've kind of seen as well?
Oh yeah, I think so. Um, there's there's nothing like that local connection uh, with the people that work there and the people that the directors and ultimately the shareholders. You like that local tie.
Right. Absolutely. So I'm going to ask this question to each of you, um, respectively, Bill and John. But Bill, you were president and CEO for 30 years, and John, you were president and CEO for, was it 2 years or 3 years?
Uh, Actually, I think I became president in 16, retired in 20 as CEO for two. I
Okay,
think I was
so
CEO for a couple of years. Is that right, Bill? I kind of lost track there.
I think you were CEO for at a minimum 3 years.
so for each of you, what would you say you are proudest of during your time as president and CEO?
The growth of the bank, the acceptance among the community banks. When I was kind of driving the truck here in West Virginia, in my case, and of course it's expanded far beyond that now. But just getting the business out of Kentucky first, and West Virginia second, I'm pretty proud of that. And the fact that we survived everything that all the doubters said we would be around a year. One of them even said. I was a Louisville correspondent banker who's been out of banking for a coon's age now.
Well, for me in my short time, of course, Bill and I worked together, low for all those 30 years,
Yep.
on virtually everything, and I can't tell you how much I learned from Bill about banking because he had worked basically in every department of a bank, large and fairly and small as well. So I think that you know one of the main things we did while I was president and CEO was we raised more capital. We kept the capital coming in to build the balance sheet and you know just have a solid presentation for when the regulators came. And I think um, we always had a very favorable rating during my tenure, as well as Bill's, and that was something that he basically conferred to me when we had a board meeting, strategic planning, and he called me in his hotel room. Said, "Well, the board's decided to let you be president." He said, "Do not mess this up." So I don't think I messed it up. I think I left it in pretty good shape for Derek, and I'm very proud of that.
My language was somewhat stronger.
I'm actually kind of personally disappointed. I thought you guys were both going to say that your highlight of being president and CEO was identifying me as your heir apparent.
Well, I have to say that timing is everything, Derek, and I had a phone call from you asking about openings in other banks because I think you were somewhat unhappy where you were, and I said, "Well, you need to come interview with us." So went straight down to Bill's office and set that up. So I think The karma and the timing was great there.
Yeah, absolutely. I think everything, obviously, I had the opportunity to work, with both of you for 7 years before taking over as president CEO, and learned, tremendous amount from both of you about what it means to be not only just, in the correspondent, which was different than my background, being more in the retail side of banking and commercial lending. But really truly understanding what correspondent banking was. I think that was the biggest learning curve I had moving into this role. And then obviously just from that leadership perspective from the top down, Bill and you and I have military background, so we speak a lot of the same language there. So it was always kind of good to have somebody who could kind of help me to translate, what you learn from in leadership and military and how to apply that in this type of environment. And then obviously, you and John, you guys were so complementary and that you were so different that, his kind of leadership style was a little different. So I was able to kind of take the best, I think, from both of you. So I truly appreciate the opportunity to learn from both of you during that time. And obviously, as you kind of, reflect on the past, I think that you guys both are a great resource for me and for our board. Bill, you still sit on the board and represent one of our outside directors roles. John, you've been a resource for me to bounce questions off of whenever something comes across the board that maybe I haven't seen before or just want a second opinion on. But as you guys kind of stay engaged with what we're doing here, even in your retirement, Bill, what would you think is the biggest challenge that community banks and maybe even Bankers Bank specifically face as we move forward?
Well, I think one of them took care of itself, the Bitcoin or they call it
Cryptocurrency.
cryptocurrency. Well, that took care of one problem because I couldn't see the Bankers Bank ever getting involved in cryptocurrency anyway. Again, worse to any risk. But now that was just one that I think we avoided. Thank goodness. I have to address that one now. But you got another 28-year-old guy running around out there stealing billions of dollars from people.
I'm sure he exists somewhere.
Yeah, I'm sure there's one somewhere.
John, from your perspective, what do you see as kind of the, I guess, biggest risk for community banking, I guess, the future of community banking and for us as a Bankers Bank?
Well, I think it's much the same as it was when we started the Bankers Banks. It's the big banks pressuring with lower pricing and products that maybe a community bank can't offer right away. Now, they do come, these super products that the large banks offer, like mobile banking and things like that, generally filter their way down, but there's a gap in between. So, that poses a challenge for them to find that, also pick up that product and make it available to customers, because they come in and say, well, I can deposit my check on my phone with XYZ large bank, and I can't do it with yours. So they have to pick up the slack there. And I think that one of the other challenges facing community banking is the lack of continuity of management and boards of directors. We have a lot of community banks that have aging directors and nobody to come in and take the bank. So they ultimately, in a lot of cases, end up selling the bank because of that. So we need more young people to stay in there, get their education, go back to their community and serve their community as a banker.
Yeah. I'd kind of like to flip Derek's question on its head, and moving forward, what do you see as some of the biggest opportunities for community banks and for maybe also the Bankers Bank?
Good question. For our Bankers Bank, I think that competition has become relatively keen between the Bankers Banks now. It has, at the beginning, it was kind of a band of brothers where we didn't encroach on each other's territories. I think that's all gone away. So that'll be a challenge, a continuing challenge for our bankers bank, in that we'll have other people coming in trying to take our customers and expand their footprint. Um, Opportunities for community banks, uh, it's much the same as it's always been, is to engage their community, to retain the business, and to just to be active in their communities. I think is so important, and to attract uh, good management and directors. I think that's important moving forward.
Yeah, kind of on that same line, it just behooves the bankers bank to support the community banks and allow them in any way, shape, or form to, again, support their own communities. We can play a role in that through the lending side, et cetera, et cetera. That's the most important thing I think the bankers bank needs to continue to do.
Well, and also on the lending side, I think when we first started, a $250,000 loan was a large loan for a community bank. That's not the case anymore. A lot of those banks are coming to the Bankers Bank now with a $10 million loan, because the stakes have increased that much. So their opportunity is there, but they need to educate staff and retain staff that is able to underwrite and manage those kinds of credits. And then the Bankers Bank helps them on the back end by syndicating those loans over, what their legal lending limit would be. So that's a great opportunity moving forward for these smaller institutions.
Yeah, I was gonna say a $250,000 loan is a starter house mortgage now.
I know.
Correct.
Derek, I'll post.
We had a customer that sold us everything over 250 at one point. That was a long time ago. And now they don't call us unless it's over like 8 million. So the game has changed quite a bit. And they feel comfortable enough to do that. That's what's so great. And I think that the fact that the bankers bank there to assist them with underwriting and structuring those types of credits makes them feel more comfortable doing that.
Yeah, for sure. Derek, I'll pose the same question to you as current CEO. What do you see as some of the biggest opportunities for our community banks or for the Bankers Bank?
But I think that the one thing that kind of positions us to have a great opportunity in front of us is the way that John and Bill approach this entire thing for the first 32 years. I think that, you look at how they established a mission and a foundation of putting these community banks first, having the conservative approach to how we were going to grow and service these clients. And, like, John said, be very matter of fact of what we can do to help them versus trying to be, shiny and flashy and come in there and maybe offer them something that really they didn't need or wasn't the best solution, has put us in a position where they're, over time, they're, from, late 70s, early 80s until, the, late 80s, there was, several bankers banks that popped up and went away. They weren't able to survive downturns in the economy, weren't able to get the traction with the customers within their kind of designated states. There was a couple of bankers banks that converted their entire mission and charter away from being a bankers bank to doing large national shared credits that end up ultimately hurting their membership and their shareholders more than helping them. And even despite these banks having massive profits and returns on investment and be able to own private jets to fly their customers to the Masters and do crazy things like that, at the end of the day, the bankers bank just stayed the course, focused on what our mission is, and that's put us in a position now where there's only 12 bankers banks left, and a lot of the bankers banks that are out there are struggling to maintain some of these services that they have. They have large investments that are in their services they're offering. some of the new correspondent partners that are out there that have kind of popped up over the last, probably 15 years. Or we're starting to see acquisitions and mergers among those groups, which is going to, take that out of the equation when we start talking to banks. So it's crazy. 35 years later, we're almost in the same boat as we were when John and Bill started. So I think our greatest opportunity is just to stay the course. Go out there and follow the mission of what we are here for. And if we do that, I believe that banks will recognize that, and opportunities like we've seen in Tennessee recently and in other states that we've kind of moved into with those lead correspondents in those states being acquired, and now creating a situation where those banks don't feel as comfortable with that partnership anymore. I truly believe if we can continue to be in front of these banks and show them what our mission and purpose is, then those relationships will come. And we don't have the risk or the inability to be nimble like some of the other large correspondents and larger organizations out there that are in our business.
Absolutely. Absolutely. I would agree with that. Do you think, and this is a question specifically to you guys, John and Bill, but like Derek said, over the 35 years we've been in existence, there have been bankers banks pop up and go away and then be merged and acquired. And we're one of 12 left now. And kind of hinted at your approach having something to do with that. But what are some of the things in your view that's helped ICBB thrive for these 35 years while others maybe haven't had the same success?
Staying the course, Bill. Just stay the course. The way we began it, they've had to add some services over the last several years because correspondent banking has changed, and I'd like to see those changes. Although at first I didn't think much of it. In all honesty, it was necessary, and I realized that. So, but staying the course and just serving the community banks of the states that we're in at this point in time is the key to ongoing success.
Well, I think exercising common sense and being relatively conservative, I think our conservative approach within the Bankers Bank matched our customer base, our initial customer base, which was Kentucky. So I think you have to look at that and say, if you're going to do something, does this make sense? And not do crazy investments or crazy expansion or doing loans in eight states away. I think it's doing what makes sense and exercising common sense and being conservative enough.
For sure. For sure. And I can only imagine that our customer banks will be comforted to hear that that's where our mind is and has been and will continue to be.
Yeah, and that's one of the things that I probably learned the most from John and Bill is, I worked for larger organizations, and I always felt that I had a customer first focus in how I approached everything I did. But there was pressure to meet certain goals and pressure to achieve certain tick marks and numbers that of measurement to kind of show my success. And coming here, it's more about the activities of what we're doing and how we're approaching it. And and they've proven if you do what our banks are expecting of us, and we do it in the right manner, and stay true to that mission, the business and the opportunities for those customer relationships will come. So,
well, I think that it's not just about making money. It's about maintaining relationships and doing the right thing for our customers. A lot of the big banks are focused on what, profit center, what's your profit center doing, and not so much with the Bankers Bank. I mean, we like to make a profit, we want to do it in the right way and treat our customers right.
Well, if you make too much profit, quite frankly, you're doing it at our customers' expense. As I told one of our directors many, many years ago, who kept saying, we need bigger dividends to be paid out. I said, all I have to do is raise your service charges. I'll pay out bigger dividends. He said, well, no, I don't want to do it that way. So just stay on the course, as I said earlier. And alluding to what John said kind of in the opening about we never were into the glitz and glamour. How many times, John, did you get asked for Derby tickets or UK basketball tickets, which we never could support?
And I always responded, what's the budget?
Yeah, how much you want to spend?
Sure. I think you guys have answered all of the questions that I had for you, but is there anything that we didn't cover that you would really like our community bank customers to know?
I think we're glad to be here and be part of this organization and having made it what it is today, and that we have a good management team in place to continue what Bill and I started.
Thank you for your vote of confidence.
Got a good crew. Keep it.
Well, I do want to just thank you both for taking some time to join Madison and I today. It's always good to connect with both of you. Obviously, as we get ready to celebrate the 35th anniversary, I think I speak not just on my behalf of myself, but I think even for our staff here and for the community banking industry as a whole. Just appreciation for everything you guys have done, the personal, risk and dedication to building this thing, to growing it and establishing it to a point where it could sustain, and then kind of setting and laying the foundation for our staff today to be able to just basically pick that up and run with it, with really the only struggles of challenges that you guys faced in the first days of the bank. So I just thank you both for being here today, for your vote of confidence and continued support of myself and this organization, and for everything you guys have done for 35 years for community banks.
Thanks for having us. Good to be with you.
It's great to hear from you guys. Thank you so much. So that was a conversation with the Bankers Bank's first two CEOs, Bill Fallon and John Clark, and our current CEO, Derek Hetherington. I hope that gives you some confidence as we head into year 35 about the direction that we're going and our remaining commitment to do what's best for our customers. I want to thank Bill, John, and Derek for joining us on this episode of The Correspondent. I hope you got some value from this conversation, and don't forget to subscribe. We'll see you next time.